To create your own model from scratch, start by opening the software and entering the default username and password, which is a lowercase a and an A. Click OK, click Continue, and then click New to create a new company. Click Proceed to open it, and then click Organisation to enter the name of the company. This name will appear on the top of all reports. Choose your opening balance sheet date from the calendar and the required GST cycle. Next, click on Periods, and here we choose between our weekly, monthly, quarterly, 4 or 5 weekly periods and the number of periods that we want to use. Well, I'm just going to accept the defaults, but note that we can extend the model at any time to 1, 2, 5, 10, 20 year forecasts, and we can also shorten it. Click OK to accept the defaults. Next, click on Accounts and Budgets. Choose Revenue. To add an account, we choose from these icons along the top of the screen. We've got New, Copy, Delete, More, which is a new plus save plus add another one, save, undo, and then cancel. We'll click New to add a new account called Computer Sales. And now we will move across the tabs. Note that we can enter accounts and we can number them so they are referenced to the financial statements. If we now click Account Properties, we will enter the optional account code. This will be useful later for importing the actual results from your ledger system. We'll confirm the currency and the GST rate. We can also confirm to use the default company tax rate or a special rate for non-deductible or partially deductible items. Click Budget Setup and choose from the options. We can either enter the budget as an amount, price or quantity, or a percentage of what we call a miscellaneous or non-financial item. These are also known as activity drivers or key performance indicators. We can set these up in another area of the software and make our revenue variable on these items. I'm going to choose price and quantity, then I'm going to click budget per period. I'm going to specify the average price, and I'm going to copy that to all periods by right clicking the amount. And I'm now going to enter the number of sales I think I will be able to achieve for one period to the next. So I'm going to copy that down for a few periods. I think there'll be an increase, and then I think there'll be another increase. Notice that Cash Focus automatically calculates the budget for us. If we were to now run a report, Cash Focus would credit computer sales with the monthly amounts, it will credit GST, and it will debit a balance sheet account that we nominate. To see the balance sheet account and how the cash flows will work for us, we need to right click where it says Sales Profile. Now we can choose any one of these, but if we click View or Edit and then click Show More, we can see that we have linked the revenue account to the default accounts receivable and the default bank account. The default timing assumption assumes that we will collect 100% of those revenues in time 0 or the same period. If I untick Show Accounts Receivable Only and then right click Pick, you can see that I could actually accrue the revenues to any balance sheet account that I choose. By unticking where it says Bank Accounts, I could choose any other balance sheet or bank account. By adding new lines, I can tell Cash Focus that on average we collect 75% of our sales in the same period, which would be reasonable for a retailer, but we have 25% collected the period following, which may be due to our corporate accounts. Now this is an average of 23 days or somewhere between 8 and 38 days. We could specify a different profile for each particular period. To add a direct cost, first click Change Type at the top of the screen, and then from the Account Navigator click Direct Costs. Then from the top toolbar click on the New icon and we'll add a new account. This account I'm going to call Computer Cost of Goods Sold. Next click Account Properties, add in an account code, check which inventory account you want to link it to. At the moment we only have one, but you can have multiple inventory accounts. Next we'll click on the Budget Setup tab and we'll choose how we want to calculate the budget. We can enter as an amount, percentage of sales. Expenses can also be variable on another expense or a number of expense accounts. We can put in cost price. We can specify a cost and a quantity. We can make it a percentage of our activity drivers. In fact, we can use calculations to work out the answer that we're after. Okay, so let's make it a percentage. We'll then choose which revenue account we want to make it variable on, and again it can be a single account or multiple accounts. Click OK, click Budget per Period, and then we tell the system what the percentage cost of goods sold is. So if we're specifying 50%, the margin is 50% as well. Let's add another new account. This time we'll call it Freight. We'll add the account code. Freight isn't a cost of goods sold account, so where it says kind of account, we'll make it a cost of sales expense. When we make an expense, the inventory part of the calculation is disabled. From our budget setup, again we'll make it variable on sales. We'll choose our revenue account, and under budget per period we'll make it 5% of sales. With expenses, or in fact any account, we can click and drag them into different folders, and we can also rename the folders any way that we like. There's a number of options again here, but we'll leave it as the amount because this is usually a fixed regular amount. Put in the budget, right click, copy to all periods, and then if we view the default expense profile, we'll see that the assumption here is that it's paid the month following. Now rather than change the default profile, which we'll use for a number of other expense accounts, what we do is we add a new profile because rent is normally paid in the month that it's due. So by creating a new profile and accepting the default of 0, we are going to pay 100% of that expense in the same period. So all we do is close the profile, right click it, and then copy it to all periods. Okay, so now we've created a few lines. If we close this and then click Results View, Cash Focus will automatically calculate the profit and loss, balance sheet and cash flows for us. Now this is a preview screen, it's not a report. What it shows us is which account lines have been used and which haven't. It also enables us to choose an item. Here I'm choosing the balance sheet, and if I double click any item, we will get a debit credit reconciliation of how that figure is made up. So that when you're building your model, you can go to Results View, click Profit and Loss, Balance Sheet, Cash Flows, and see how the model is being built for you. Here we have the cash flow. We can drill down the cash flow by profit center to see what the contribution is. If we close that and then click Reports Budget, here are our main report options. If we click Profit and Loss, we will now see a report taking shape for us. This report 0 suppresses any lines that are not being used. Okay, so have a turn yourself, try clicking New Model and then add a few lines and see what you can come up with.